Pablo, good to see you. How you doing? How you been? First one in today, as always. Let's go. Evening, Miles and CMF. How was your day today, Joe? How you doing? How you been, brother? Today was a very hectic day, to be fairly honest, but we made it through. What's up, Miles? What's up, CMF? Kerry, good to see you as well. How you doing, brother? How you been? Hi, Miles. Autistic, good to see you as well. How you doing? How you been? Good day, Miles and CMF. Mike, good to see you as well, brother. How you doing? How you been? Good evening, Professor Miles and the rest of the family. Let's go, funky brother. Good to see you as well. How you doing? How you been? Hello, Miles and CMF. Scott, good to see you, brother. How you doing? Yes, sir. CMF. Let's go, Davey. How you doing? Good evening, Miles. Good to see you as well, Susie. How you doing? Okay, do you know what we'll do? We'll do the intro disclaimer, and by that time, everyone's tuned in for the first part because we have a mixture of news to go through on tonight's live, just like always. And we have essentially banking news to go through, company treasury news to go through, international news to go through on tonight's live, and also Ripple news, of course, to go through on tonight's live. So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent updates on cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much everything you need to know about regarding the world completely transforming into a digital space. You can tune to this live show Monday, Friday, 10 p.m. London time onwards. This is episode 350 of the CMF Live that you're watching right now, which is incredible that we've made it all the way up to episode 350. Also, the disclaimer of this live show is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we do Q&As on this live as well, which means if you do have any questions or even statements, put it outside the comment section. More than happy to read them out and give a perspective on the matter. Now, on tonight's live, we're going to go through some Michael Saylor news. We're going to go perspective news. We're going to talk about some international news regarding cryptocurrencies. We're going to talk about essentially many other companies that are entering the crypto space and creating their own version of a treasury. And obviously Ripple news to go through on tonight's live as well. Now, the first news we are going to be covering on tonight's live is regarding Michael Saylor. But before we go through Michael Saylor news, let's go start the comment section first, and then we'll go straight into the first news. Good evening, Miles of CMF. Manny, how you doing, brother? Hello, Miles of CMF Comatose. How you doing? Good evening, Miles. How are you doing? I'm doing great. Kelly, how you doing? Hi, brother. Coin is... Come on, good to see you, brother. How you doing? How you been? Good evening, Miles of CMF. Orvin, good to see you. How you doing? How you been? How has your day been, Miles? It's been a very busy day, but good to see you, Olina. How you doing? How's your day? Share the live. Let's go, Scott. Hyper Sniper. Let's go. How you doing, brother? Good evening, Miles of CMF. Free and forever. Good to see you. How you doing? How you been? Just had to switch to YouTube. No problem. Hello, Miles of CMF members. I hope that you had a good day. Let's go, Scott. Miles, congratulations on episode 350. Thank you so much, Scott. Hello, Miles. T, good to see you. How you doing? How you in? Hi, Miles and CMF. How you doing today? I'm doing great, Carlos. How you doing, brother? Hi, Miles and CMF. Stormy, good to see you as well. How you doing? Perfect timing, because we're about to go for the first news as well, Stormy. And also, just want to take 1 second just to say thank you so much to everybody who has already liked and retweeted this live. If you're watching this on X, thank you so much to everybody who has already liked and retweeted this live. If you watch this on X and if you watch this on YouTube, thank you so much to everybody who's also liked the live as well. We're already at 12 likes on X right now and 8 retweets. Thank you so much to everybody for the retweets and likes on X. If you haven't liked or retweet, please like and retweet on X. If you're watching this on X, if you're watching this on YouTube, just drop a like. Now, Michael Saylor news is the first one we're going to cover on tonight's live. So Michael Saylor comes out with the sentence, "Don't sell your Bitcoins." Michael Saylor, executive chairman of MicroStrategy and one of Bitcoin's most essentially vocal supporters, has once again made headlines. In his latest statement, Saylor essentially said, "Don't mince your words. Do not sell your Bitcoins." Now, none of this is financial advice in any sort of way. I'm just reading you the news. I'm sharing you the news regarding Michael Saylor's perspective. He said, "This bold declaration continues his long-standing beliefs in Bitcoin as a long-term store of value." The reason why Michael Saylor today came out and said, "Don't sell your Bitcoins," is because recent news came out from the data that was shown that BlackRock essentially has taken substantial amount of essentially Bitcoin ETFs and transferred them over to Coinbase Prime. which made Michael Saylor today come out with the sentence, "Don't sell your Bitcoins." Saylor's position isn't new on this matter. Since MicroStrategy began accumulating Bitcoin back in starting essentially 2020, he has repeatedly expressed confidence in the assets essentially as a scenario of a hedge against inflation and economic situations and instability. According to him, Bitcoin is not a short-term trade, it's a generational investment. Saylor has likened Bitcoin to gold on numerous occasions, comparing it, calling it the apex property of the human race. For him, Bitcoin's fixed supply, decentralization, and security makes it superior to traditional assets. His message is clear. Selling Bitcoin now could mean essentially missing out on long-term wealth and essential preservation. Instead of trading based on market cycles, Saylor encourages individuals and institutions alike to adapt to a long-term strategy, buy and hold instead. He believes Bitcoin's value will essentially only increase over time as global adoption essentially grows and fiat currencies continue to devalue. It's actually true up to a certain extent. The reason why the crypto market went ever so slightly up today and why Bitcoin turned green a little bit today is only because the dollar was devalued today. And when a dollar gets devalued, an alternative market space like cryptocurrencies do better. For retail and institutional investors listening to Saylor, the message is simple. Holding essentially Bitcoin is about vision and patience. Saylor's confidence has helped drive MicroStrategy to acquire over 200,000 plus Bitcoins, showing he's putting his money where his mouth is. While the crypto market remains volatile, Saylor's advice offers a grounding philosophy: trust the fundamentals, ignore the noise, and hold strong. It's the same sentence pretty much used for XRP. Trust the fundamentals, ignore the noise, and hold strong, and keep your patience, essentially. In my point of view, XRP will go a lot more further down the road than certain other assets, but everybody has their own opinions and perspectives on that matter. But what Michael Saylor said, don't sell your Bitcoins. I mean, it's only based on because BlackRock was transferring over a substantial amount of Bitcoin ETFs to Coinbase Prime. They haven't sold according to Arkham Intelligence yet. If they do, obviously Arkham Intelligence will share that data. So they haven't sold, they just transferred into it. But it makes sense why Michael Saylor came out today and said, don't sell your Bitcoins, because his company is reliant on Bitcoin. If Bitcoin goes drastically down, so does his company. If it plummets, so does his company. Now, Hong Kong is what we're going to talk about next on tonight's live. Hong Kong has decided to enforce a very strict rule or rules for stablecoin issuers right now in Hong Kong. So the world is moving heavily towards stablecoins, especially when the United States of America signed the Genius Act into law. When President Trump signed the Genius Act into law, made stablecoins, a stable, let's just say, for the rest of the world. It's given some credibility to them, and every country now is getting involved in this stablecoin agenda, trying to pass their own regulations. Some countries are strictening their rules on stablecoin regulations and so on. But what Hong Kong has done is going to make it very difficult for stablecoins like, for example, USDT to exist. So here it is. Hong Kong has officially rolled out its stablecoin ordinance, introducing one of the world's most tightly regulated frameworks for fiat-backed stablecoins. Under this new law in Hong Kong, any entity looking to issue a stablecoin in the region must first obtain a license from the Hong Kong Monetary Authority. Simple, up to a certain extent. But a license is pretty much standard. So what's the enforcement sector? The ordinance enforces a one-to-one reserve requirement, which means that if Tether wants to operate in Hong Kong, they have to show their reserves, and most likely have to hold some of their reserves in Hong Kong, meaning that every stablecoin issued must be backed by an equivalent amount in fiat currencies, which is something that Tether doesn't do often. Additionally, issuers must comply with strict capital adequacy standards and provide guaranteed redemption mechanisms to protect users, which is the same scenario that happened, same offering, you could say, that was going on in the EU, when the EU said essentially to Tether and Circle, if you want to release your stablecoins in the EU market space under our regulations, then essentially you have to hold a certain amount of your reserves in EU banks, just in case your tokens depeg once, somewhere down the line. Then essentially you have some reserves in the EU banks that we can save ourselves with, which Tether rejected and Circle agreed to. That's why we have USDC in Europe and why we don't have USDT. Now, Hong Kong essentially is coming up with the same scenario as well, where they're essentially saying, it has to be, essentially, we have to see your reserves. It has to be a strict reserve. It has to be a 1-to-1 ratio. You have to be backing it by fiat currencies. Perhaps the most controversial part of the new framework is RIGIT. It's actually reached to know your customer KYC requirements. All wallet holders and participants must undergo full identification, essentially verification. The law also bans anonymous wallets, aiming to limit illicit activity and improve transparency. This part is new. Every other country around the world that is getting into stablecoin regulations is pretty much par on the same level when it comes to the law. This section is new. This added feature that Hong Kong is applying to it, it kind of goes with the flow the world is going towards right now. The world is going towards censorship. It's going towards CBDCs. It's going towards essentially social credit systems, carbon footprint, and so on. So this one is definitely new. And here it is. I mean, just read it out to you again so you have a better understanding. All wallets, all essentially wallets in Hong Kong, the holders and the participants must undergo a full identity verification. So if you hold a wallet in Hong Kong, stablecoin wallet essentially, if you hold a wallet in Hong Kong, your wallet must be backed by an identity, so a passport of some sort. That's not a rule that's somewhere else in the world for now. Not saying every other country won't essentially introduce this idea, but Hong Kong is definitely the first one to introduce this, where if you hold a wallet, your own wallet, not an exchange wallet or essentially a, some sort of wallet by Coinbase or Binance or Kraken or something, nothing like that, because you're already identified there. If you hold a wallet that belongs to you, a cold wallet, a hot wallet, Hong Kong's authority wants to know it belongs to you so they can stop illicit activity. Sounds very familiar what's going on with censorship right now, where they're saying you have to show your ID to get to certain websites. So the law also bans anonymous wallets. So if your wallet is anonymous and nobody knows who it belongs to, and essentially the Hong Kong Monetary Authority doesn't know who this random wallet belongs to, it's banned. Aiming to limit the illicit activity and improve transparency in Hong Kong. And everybody thought going into a digital world, it's about decentralization. I said this a very long time ago. I said the idea of living in a decentralized world is lala, because we don't even live in a decentralized world now. What makes you think we're going to go towards? Look, I always said, sure, we'll live in a decentralized world, but with elements of centralization on top. So yeah, sure, we'll live in a decentralized world and DeFi market will exist, but with elements of centralization. Otherwise, the system wouldn't exist in the first place. The world is all about control and greed. And it's showing that. And everybody thought going into it essentially a digital world, it's all about hiding your identity and, decentralization and so on. Not really. It's about going to a very controlled world with decentralization, but elements of centralization. Even more notably, the ordinance essentially prohibits any links between licensed stablecoin projects and decentralized finance platforms. This conservative essentially move distanced Hong Kong from the DeFi sector and has raised concerns within the crypto community about the future of decentralized innovation in the region. People are coming out and saying, well, this isn't decentralization. What is Hong Kong up to? I think personally, it's going to be something that's going to be implemented everywhere somewhere down the road. The law also includes cross-border compliance obligations, meaning companies must ensure their operations meet international standards. This introduces ongoing oversight responsibilities for stablecoin providers, further solidifying Hong Kong's intent to become a regulated crypto, essentially hub, one that prioritizes safety over decentralization. Reactions to the ordinance have been very mixed right now in Hong Kong. Supporters argue that clear regulatory frameworks can attract institutional players and build trust, which is a fair point. Building such a very decentralized and centralized system definitely does add the value of trust, where essentially institutions feel more comfortable, openly entering this market space. Critics, however, warn that Hong Kong's ultra-conservative approach may stifle innovation and deteriorate essentially DeFi developers from operating in the region. also a fair point, that DeFi developers will probably move out of Hong Kong and go somewhere else. Despite the divide, this move signals Hong Kong's broader strategy to lead in regulatory clarity, even if it means taking a cautious stance on emerging blockchain trends. So Hong Kong officially is the first country to say everybody that has a wallet needs an ID backing it. So if you own a wallet in Hong Kong, when it comes to effect, you have to back your wallet address with your passport. If you don't, your wallet address is going to be blocked from doing any sort of transactions. Now, but that is only in Hong Kong, so don't worry. If you do live outside of Hong Kong, you're pretty much fine for now. Now, the Smarter Web is what we're going to talk about next. The Smarter Web company has just raised $21 million. So another company has decided to enter essentially the fields of going inside a blockchain space and creating some sort of a crypto treasury. In this case, they went for a Bitcoin bond. But what's interesting about this, it's the first one in the UK. In a groundbreaking move for British capital markets, the Smarter Web company has raised £15.8 million, which is roughly about $21 million, through a Bitcoin-denominated convertible bond, essentially making a rare intersection between traditional finance and digital assets in the UK. Announced essentially today via the London Stock Exchange, the offering, dubbed Smarter Convert, was fully subscribed and backed by the French asset management essentially firm Tabon. The investment firm participated through 3 of its funds so far, and essentially underscoring the growing institutional interest in crypto finance instruments. Tabon also, which managed over $2 billion in assets as of the end of 2024, has been active in the digital asset space since 2017. When it launched essentially one of the first Bitcoin mutual funds for institutional investors. The 12-month Bitcoin denominated bond is convertible essentially into the Smarter Web company shares at a 5% premium to its price, essentially that came to $2.60, setting a conversion rate at approximately $2.73. If all the essentially bondholders opt to convert the company, would have to issue just over 7.7 million new shares. However, if the stock price increases by more than essentially 50% above the conversion price for 10 consecutive essentially trading days, the company has the right to initiate a forced conversion or diversion through essentially debt equity. Bondholders who essentially decline conversion will be repaid 98% of the bond's principal in Bitcoin upon maturity, with essentially repayment amount tied to the market price of Bitcoin at this time. Andrew, also the CEO of the Smarter Web company, called the bond structure a first of its kind in the United Kingdom of capital markets, adding that the innovative approach allows the firm to tap into new funding streams while preserving shareholder value. Reactions to the ordinance have been mixed. Supporters argue that the clear regulatory framework can attract institutional players and build trust. Critics, however, warn that Hong Kong's also ultra-conservative approach may stifle innovation. Even the UK is talking about the Hong Kong scenario that's going on right now, but putting Hong Kong to one side. Regarding the UK is about to essentially be launching multiple things regarding ETNs, but the first one is kind of a bond Bitcoin is what's going on right now in the UK. It's nice to see that the UK is taking some footsteps inside the digital space, because they are miles not ahead in any sort of a way. Because the EU, as I said previously, EU, Hong Kong, Singapore, all the Middle Eastern countries, even the US, every single one of these countries are miles ahead of the UK when it comes to crypto regulations. So it's nice to see, even though that the UK government isn't taking any footsteps inside the digital space, at least the British institutions are taking footsteps essentially inside the crypto space. So that's nice to see. Now, moving on from that to Bitwise is what we're going to talk about next. Before we go through Bitwise news, let's go inside the comment section first, and then we go straight into the next news on tonight's live. So let's see where we were at. We were at here, I think. Yeah. And as I said previously, this is live, as always, which means if you do have any questions or statements, put them down inside the comment section. More than happy to help you out. Even Miles and Crypto Peeps Semper, good to see you. How you doing? How you been? Miles, I retweet and like this live every night without a miss. I hope everyone does the same. Funky brother, thank you so much, for always liking the live and retweeting the live. Absolutely, thank you so much. Amazing. Even Miles, Leap, good to see you as well. How you doing? How you been? Sapper, good to see you as well. How you doing? Evening, Miles. Mac, how you doing, brother? How's things? Good evening, Miles. Hope you're well, mate. Addy, good to see you as well, brother. How you doing? Like and repost, guys. Facts. Joel, let's go. If you haven't liked or repost, please like and repost this live if you're watching this right now. What up, Miles and CMF? Happy hump day. Let's go. Let's go, Ray. How you doing, brother? Hi, Miles, the CMF family. Good to see you guys. Let's go for facts. It's facts. Let's go, Carl. Now, next news on tonight's live. It's regarding Bitwise. But Bitwise's CIO has a new perspective on the market space right now. So, here it is. Bitwise's CIO says crypto markets may be underpricing essentially SEC's pro-blockchain shift. So, this also goes back to what I've been saying in the past few days. In the past few days, I've been telling everybody that the White House crypto report that came out was a big deal. It might have not seemed like it was a big deal because the market didn't react in a positive way, but the White House reporting was a big deal because straight after the White House reporting, the SEC changed their tone. And so did the CFTC. CFTC created a project called Crypto Spirit to bring innovation back in the US. The SEC created Project Crypto to bring innovation back into the US. So Bitwise's CIO is saying that essentially people are, not paying attention to what's going on regarding the SEC. The SEC is making, taking bold steps right now inside the crypto space to bring innovation back into the US, and people aren't paying attention to it, is what Bitwise's CIO is saying right now. Bitwise, essentially asset management chief investment officer Matt Hugan, believes crypto investors may be underestimating the dramatic shift in regulatory sentiments following a recent speech by the US SEC Chair Paul Atkins. Speaking at the America's First Policy Institute, Atkins laid out a vision for integrating blockchain technology into the US financial markets. A move essentially Matt described as the most bullish document I've ever read on crypto. Big statement. The most bullish document he's ever read on crypto came from the SEC chairman, the current SEC chairman, Paul Atkins. Financial markets, essentially, on that matter, integrating essentially, this wasn't written by some Yahoo on Twitter. Matt Hugan said today, it was written by the chairman of the SEC. This speech has sparked optimism in digital asset space, especially among institutional players who view the regulatory clarity as a key to unlocking mainstream adoption. Matt Hugan noted that the markets may not have fully priced in the implementations of the speech, nor essentially the broader policy pivot essentially happening right now under the SEC. I agree 100%. The market definitely hasn't priced in what the SEC is doing so far regarding all the positiveness is bringing back to the States right now. The market definitely hasn't priced in. I agree with Matt Hugan. I said this a few days ago. The market is not essentially the market didn't react the way it should have regarding the White House report, regarding the change of tone from the SEC and the CFTC and the crypto projects the SEC essentially and the CFTC have created. CFTC, they created Crypto Spirit is what their new project is called. The SEC has created Crypto Project, what their new project is called, essentially bringing back innovation. And the market is definitely not reacting the way it should be to this news. It's extremely bullish. In the long term, it's extremely bullish. Atkins, appointed back in April, essentially under President Donald Trump's administration, has overseen a reversal in the agency's stance on crypto. The SEC has dropped several long-standing enforcement actions against crypto firms and recently launched Project Crypto, an initiative aimed at establishing clearer, innovation-friendly rules for the crypto sector. Matt Hugan believes the new SEC direction could catalyze essentially a major shift in the financial system. He pointed to Atkins' remarks about moving traditional assets, including stocks, bonds, and fiat currencies, onto the public blockchain, calling it a signal for potential of exploitation growth. He also essentially highlighted the SEC's chair's mention of these super apps. Integrated financial platforms, firms like Coinbase and Robinhood are already building as another essential area poised for expansion. The bullish regulatory momentum that's happening right now comes even as past misconduct in the industry continues to be addressed. Earlier this week, Kong Hing Tang Dai, founder essentially of defunct lending platform agreed to pay $10.5 million to settle the SEC allegations of misusing investor funds, also to purchase Terra USD. On a separate matter, regarding the SEC, 100% the market hasn't priced in it because the SEC is moving tremendously bullish. But let's see if the SEC continues moving tremendously bullish when we get somewhere around August 15th on essentially the SEC backing down from the Ripple case. Then confirmed the SEC is tremendously bullish going forward, and it's a bright future ahead of everybody. Let's just be honest with ourselves. If that happens, bright future ahead of everybody. Either way, that case has to get dropped anyways, but if the SEC drops it somewhere around or before August 15th, it's a definite confirmation that the SEC is 100%, 1,000,000,000% bullish on crypto. But I agree with Matt Hugan. The market hasn't priced it in. Regarding the White House crypto report that came out, it wasn't a nothing burger. It actually had quite a lot of value attached to it because of what happened straight after with the SEC and the CFTC. So I agree with him 100%. The market should have priced that in. Now, it's nice to see another CEO or essentially CIO, someone very high profile up, backing essentially what I said a few days ago. Now, moving on from that to another British company that's decided to come forward. As I said, even though that the British government is not very focused on bringing innovation back to essentially the United Kingdom regarding blockchain technology, at least the British companies are. So another British tech firm by the name of Satsuma Technology has just secured £163 and essentially £163 plus million pounds, which is equivalent to around $217 in gross essentially proceeds from its second convertible loan note round, with nearly £125 million of that total settled in Bitcoin. A British company essentially settled some sort of payments in Bitcoin. First one ever to do this. A move aimed at deepening its Bitcoin treasury strategy also. Essentially, the raise, which concluded on July 28th, surpassed its £97.1 million, £97.1 million, which is equivalent to $129 million minimum target by more than 63%, driven by any significant interest from both crypto and essentially natives and in traditional essentially institutional investors, the company said in an announcement today. Satsuma's CEO Henry called the raise a landmark validation of the company's mission to fuse Bitcoin native treasuries with decentralized AI infrastructure. This British company is trying to create something similar to what MicroStrategy has been doing inside the United States. This British company wants to become the essentially MicroStrategy of the United Kingdom. This moment essentially represents a landmark validation of our core beliefs, Eldor said, adding that the willingness of investors to subscribe using Bitcoin, totaling essentially 1 million plus, 1,000 plus Bitcoins, underscores the confidence in the company's innovation and execution. The round attracted support from high-profile crypto investors, including Parafai Capital, Pantora Capital, Argoton Capital, Kraken, Blockchain.com, DCG, Kentic Capital, and the list just goes on. Several London-based equity funds managing over £300 billion in assets also participated in this matter. The notes will convert to equity at a price of essentially 1 cent per share, subject to shareholders and regulatory approval. Proceeds will fund operations such as developers, recruitments, and Bitcoin acquisitions through its Singapore-based entity, Sutmaser PTE. This marks a Sutmaser's second major raise essentially this year. In June, the firm pulled in $135 million to begin building its Bitcoin treasury. As of August, essentially, the company now holds 1,126 Bitcoins, valued at about essentially around $128 million, with an average essentially acquisition cost of $115,000, placing it essentially a marginal unrealized loss of 0.76%, according to BitcoinTreasury.net. Sutmaser also operates and funds essentially subnets within Bitsoners, a decentralized AI marketplace, and develops infrastructure and validator nodes for the network. It also runs essentially a subnet task marketplace supporting AI agent developments. The fundraising comes aimed at a broader wave of crypto treasury activity, according to recent essentially reports by Galaxy Research. Traditional firms increasingly integrating digital assets into their balance sheets. So, a British company has decided to enter the Bitcoin space by creating a Bitcoin treasury. So far, they have roughly about 1,000 plus tokens of Bitcoin, sitting at around $128 million. A lot of companies were involved in making this essentially happen inside the United Kingdom. The company is also based essentially out in essentially Singapore, which is where they do most of their activity. but they're counting it as their British, essentially, venture, treasury, Bitcoin, so on. Again, honestly, it's great to see British companies taking footsteps inside the crypto space while the government is still sitting on the sidelines. Now, moving away from the UK to Europe. The European Banking Authority has issued new crypto asset risk guidelines for EU banks. So the EU is actually, getting quite a bit strict on cryptocurrencies because the EU is getting very close to releasing some sort of CBDCs right now. So here it is. The European Banking Authority released comprehensive guidelines today requiring banks across the European Union to implement stricter capital requirements and detailed risk management protocols for cryptocurrency holdings. The regulatory framework published as a final draft regulatory technical standards under the Capital Essential Requirements Regulation marks a significant step towards standardization on how financial institutions handle digital assets through the 27-member bloc. The European Central Bank, essentially, new guidelines establish new uniform, essentially, capital requirements for banks holding crypto assets, ending regulatory uncertainties that previously deteriorated institutional participation. The same thing, essentially, the United States is doing right now with that White House crypto report that came out, with Trump essentially creating another executive order to let the crypto companies work with the US banks, and essentially to stop the US banks from throwing hurdles for essentially companies like Ripple or Circle trying to get banking charter licenses. Is the same thing that's happening in the essentially in the EU right now, where in Europe they're trying to make it essentially that fintech companies can work with banks at a much more easier for them to work together than what it was before. Because even in essentially in the EU, banks don't like the idea of Ripple companies taking their place, because banks know that they're going to become the thing of the past, and that companies like Ripple are going to be taking their position, and banks don't essentially like that whatsoever. But the European Central Bank is now telling them to start working with fintech companies. Banks must now implement rigorous risk models, also accounting for credit risk, market risk, and counterparty credit risk when dealing with digital assets. The framework aligns with essentially the EU's marketing crypto assets regulations and provides regulatory clarity for institutions seeking to enter cryptocurrency markets. The August 5th publication follows months of consultations as European banks express mounting interest in cryptocurrencies related services. Financial institutions have begun essentially exploring roles and custodians of digital assets, issuers of crypto-backed products, and providers of trading and essentially lending services for clients. The EU is looking into every sector of the crypto space: lending, borrowing, housing, tokenization, custodian, trading. Everything related to cryptocurrencies the EU is looking into right now. Institutions have shown such an increasing interest in getting involved in crypto asset activities, the European Central Bank said, and stated in its announcements. The authority attributed this essentially trend to potential new revenue streams and competitive pressures within the banking sector. The guidelines require banks to calculate and essentially aggregate crypto asset exposure using standardized methodologies. This approach ensures consistent applications of rules across all EU member states, eliminating the patchwork essentially of national regulations that previously complicated cross-border operations. Because some European countries are trying to create their own laws in cryptocurrencies and others are trying to create their own rules, it just won't work out. So for the EU and together to be on the same page as the 27 bloc makes a lot more sense, is what they're trying to say. And I agree, the EU needs to be on the same page for essentially cross-border payments to work, for cryptocurrencies to work, and so on. Banks previously hesitant to enter cryptocurrency markets due to regulatory ambiguity now have a clear operational parameters. The framework provides institutional confidence while maintaining the strict oversight European regulators consider essential for financial stability. The technical standards specify detailed procedures for institutions to assess their cryptocurrency exposures. Banks must develop comprehensive risk models that address essentially multiple categories of potential losses associated with digital asset holdings. Of course, the banks have to reassure their customers just in case something does go sideways. Credit risk assessments require banks to evaluate the likelihoods of counterparty essentially defaults in cryptocurrency transactions. Market risk calculations must account for notorious essentially price volatility of digital assets. Counterparty credit risk models must consider the unique characteristics of cryptocurrency trading platforms and custody providers. Also, the RTS address implementation aspects will ensure harmonization of the capital requirements on crypto assets exposures by institutions across the EU. The European Central Bank also explained these technical requirements represent some of the most detailed cryptocurrency regulations implemented by any major financial jurisdictions. The framework also establishes minimum capital buffers banks must maintain against cryptocurrency positions. These requirements follow international banking standards while accounting for specific essential risks associated with digital assets. Do you know what all of this means in the most simplest sentence? The simplest way that I can say it essentially for everyone is this means that the European banks are about to get a green light to fully enter the crypto space. The European banks are about to get a full green light to enter into essentially crypto space, and so will the institutions, because the banks enter, the institutions will freely enter. That means liquidity for us inside the crypto space. Parallel to the European Central Bank's institutional guidelines, the European Securities and Markets Authority published new essentially competence requirements for employers working in cryptocurrency firms. These standards ensure that staff providing advice or information about digital assets possess adequate knowledge and training. Regarding also giving advice, I mean, think about it, they're essentially going to be hiring new people. This is how seriously they're taking it, where essentially banks are looking at training their employees or even institutions training their employees so they can give crypto advice to their client base. The ESMA guidelines stem from a February consultation paper that identified gaps in employees' essentially expertise across the cryptocurrency sector. The authority emphasized that the proper staff training enhances investor protection and builds trust in digital asset markets. These employee standards complement the institutional frameworks by addressing human capital requirements alongside financial regulations. The combined approach reflects European regulators' comprehensive strategy for cryptocurrency oversights. The competence essential requirements align with the MiCA provisions and establish minimum knowledge standards for client-facing roles in cryptocurrency businesses. The capital requirement regulations, CRR forms, essentially the cornerstone of the European banking supervision, establishing minimum capital standards for financial institutions. These rules ensure banks maintain sufficient reserves to absorb potential losses while essentially continuing operations. In other words, banks will have to hold substantial amounts of some sort of essentially assets to back whatever they're buying, cryptocurrencies and so on, which means that banks will start essentially storing certain assets. And that could be essentially fiat currency, storing it on that basis, or even crypto assets, storing them for their own client base. Markets and crypto asset regulations, MiCA, represents the EU's comprehensive cryptocurrency legislations, covering everything from stablecoin issuance to exchange and essentially licensing. The regulation creates uniform rules across member states and establishes consumer protection standards. The regulatory technical standards, RTS, provides detailed implementation guidance for broader legislative frameworks. These documents translate general regulatory principles into specific operational requirements that institutions must follow. Prudent essentially treatments refers to regulatory approaches designed essentially to ensure financial institutions remain solvent and stable. These rules typically require banks to hold capital reserves for their own risk essential exposures. The regulatory clarity provided by these guidelines represent a watershed moment for cryptocurrency adoption in European banks. Just to repeat that one more time for you, that the statement that came out from the EU, the regulatory clarity that's coming out of the EU right now, provided by essentially these guidelines, represents a watershed moment for cryptocurrency adoption in European banks. European banks, honestly, are about to get a full green light of entering into the crypto space, and so will the institutions. The traditional financial institutions can now develop cryptocurrency services within established regulatory parameters. Industry observers expect the framework to accelerate institutional cryptocurrency adoption across Europe. Just repeat that one more time. Essentially accelerate crypto adoption in the EU for institutions and banks. This is what this law is going to do. Banks that previously avoided digital assets due to regulatory uncertainty now have a very clear operational guideline, which means banks that didn't know what to do inside the crypto space or didn't know what the gray areas were. Now there's no more gray areas. It's green lights only. The Asset Servicing Times noted on social media that the guidelines create new rules for how European banks must determine and oversee crypto assets under new capital rules connected with the Basel essentially and the MICA. Several major European banks had delayed cryptocurrency initiatives pending regulatory clarification. Now they don't have to essentially wait on the sidelines anymore because they got their green light and their clarification. The EBA's framework removes this essentially impeding essentially while maintaining the strict oversight standards European regulators consider essential. The European Banking Authority's new crypto asset guidelines establishes comprehensive risk management standards for banks operating inside the digital asset space, providing long-awaited regulatory clarity while maintaining strict essentially oversights. The rules position the European Union as a leader in cryptocurrency regulations by balancing innovation with financial stability concerns. So, EU banks just got a full green light to enter the crypto space. Many banks came forward and said we wanted to enter inside the crypto space, but we couldn't because we didn't know what the gray areas were, what the green areas were essentially. Now, the EU has just come out with a full, comprehensive guideline of telling the banks what they can and can't do inside the crypto sector, which means the EU has just given the banks and the institutions a full green light to enter the crypto space. And in their own words, this guideline that's coming out of the EU is going to accelerate the adoption rate of cryptocurrencies, in their own words, from banks and institutions entering the crypto space. Yes, because they will be providing a tremendous amount of liquidity. Honestly, things are just getting started in the banking institution sector. It's all about banks and regulations and institutions as we move forward, which means it's all about money, money, money. The simplest way to put it. Now, let's go inside the comment section before we do go through the next news. And the next news is regarding Korea. But before we talk about Korea, let's go inside the comment section first. Let's see where you're at. We were at, as I said previously, this is live as well, which means if you have any questions or statements, put it down in the comment section. More than happy to help you out. Let's see where we're at. Hi, Miles and CMF family. Good to see you guys. Let's go, Fax Call. Let's go, Scott. Let's go. Anything on a hot SEI wall and beam? No news regarding hot SEI wall and beam, but beam's still good in the gaming sector. Hot still good in the sector it's in. SEI's okay. Wall, I don't know what their recent movements are, to be fairly honest. Now, outstanding. Bring the green lights. The more the better. Let's go, Ray. Korea is what we talk about next. Kakao Bank in Korea prepares to enter Korean stablecoin market. Kakao Bank has announced plans to enter South Korea's stablecoin market. Right now, the whole world is going to stablecoins. Because the US did it, everybody wants to be in stablecoins now. Kakao Bank has announced plans to enter South Korea's stablecoin market, aligning efforts with the Kakao Group Task Force to support domestic digital asset issuance and custodial services. Kakao Bank, South Korea's digital banking giant, has announced its preparations for entering into stablecoin markets, focusing on digital asset issuance and custody. This aligns with the government's policy to enhance the Korean won stablecoin sector. Kakao Pay, a Kakao subsidiary, has applied for stablecoin-related trademarks, supporting the government's strategy to strengthen South Korea's financial ecosystem. Kakao Bank's comprehensive experience, essentially in KYC and AML protocols, provides it with a unique advantage. Ko-won T-hon, the CFO essentially of Kakao Bank, underscores their role, noting we are exploring various methods to participate in the digital asset ecosystem. This includes the potential issuance and custody of digital assets such as stablecoins. The Korean stablecoin sector is seen as a pivotal in preventing capital outflows, aligning national essentially economic strategies. And essentially, South Korea's mobile banking penetration hit nearly 50%, emphasizing the nation's adaptability in financial digitalization, likely to support the future of the stablecoin regulation. Kakao Bank's entry into stablecoin arena could significantly influence the domestic financial landscape of South Korea. The move might stimulate competition, prompt regulatory advancements, and foster technological essential developments, potentially enhancing South Korea's essential position in the global digital finance ecosystem. A bank in South Korea has decided to spearhead towards stablecoin regulations because everywhere else around the world is also spearheading towards regulations straight after that Genius Act happened. And this bank is essentially seen as an opportunity to push South Korea to the next step by bringing in stablecoins, in some sort of manner through their bank. Stablecoins add liquidity towards the market space. So all of this also equals to money, money, money. Now, Cosmos is what we're going to talk about next, specifically Cosmos Health. But before we talk about that, let's go to the comment section first, and then we'll go straight into the next news. Let's go right. And morning, Miles and CMF. Shelly, good to see you as well. Shelly, how you doing? How you been? I hope you're feeling better since yesterday, Shelly. You were a bit ill, you said yesterday on the live. Hope you're doing better now today. Now, Cosmos Health. Cosmos Health has just secured $300 million for an Ethereum treasury. A lot of companies out there right now creating Bitcoin treasuries. Some created XRP treasuries. This one created an Ethereum treasury. Cosmos Health Inc. is also a public company, has now just secured a $300 million in funding from US investors to create an Ethereum reserve, marking a significant move for corporate crypto treasuries. This strategy positions Cosmos Health within cryptocurrency finance circles, highlighting Ethereum's growing role in corporate assets and management as such as shareholders respond positively with a 18% stock price increase. Cosmos Health has essentially aimed to reshape its financial landscape by incorporating Ethereum into its treasury strategy. As per the securities phase agreements, this Chicago-based healthcare essentially group intends to purchase Ethereum with a major portion of the proceeds from its newly secured $300 million financing. Is that entire $300 million going to go towards Ethereum? Probably not. Is some of it? Yes. This pioneering move by Cosmos marks a substantial expansion of its financial tools, reflecting a very broader commitment to embracing cryptocurrencies. The move essentially for the company foresees such integrations not only enhancing its financial flexibility, but also potentially accelerating essentially market performance through new capital avenues. The market essentially reacted positively to Cosmos Health announcements with its 16% up on price on the essentially public stock exchange. This financing marks a new streak milestone, giving our essentially shareholders a unique direct exposure to Ethereum, while also securing growth capital for product developments, R&D, and our planned expansions into US manufacturing. It reflects our long-term commitment to innovation, said essentially from Cosmos Health. They also went on to say that essentially the analysis indicates that Cosmos Health's move into Ethereum may simulate similar strategies among public companies. This, coupled with Ethereum's recent gains, suggests heightened essentially interest in crypto assets as practical financial holdings, blending the lines between crypto and traditional finance. It's great to see essentially companies coming forward, creating some sort of a crypto treasury. I love the idea of that happening. In this one, even though it's just for Ethereum, it still brings eyes towards the crypto space and adds that credibility factor towards the entire crypto space. Now, I've said for the longest time, before I share the next news, let's go to the comment section first. And then we'll go straight into the next news of tonight's live. Let's see where we're at. All those banks got the okay now, maybe because the ISO is going live soon. Interesting timeline. The EU banks getting a green light because ISO is about to go live. The EU did say they're doing this because of their RTG, which makes sense with the ISO scenario. So par on par, yes, I would say, and no at the same time, but mostly yes. Which stablecoin is better to have right now in the essentially crypto market? As I am French, Caribbean islands, do you think Burkina Faso will get its own crypto money or a stablecoin? Do I think the French Caribbean islands will get its own essentially stablecoin? Somewhere maybe down the line, probably yes. But for the time being, if you want to hold a stablecoin, Funky Brother put it best, RLUSD all the way. I agree 100%. Obviously, USDT has the bigger portion of the market space. USDC is also there as well, but barely anybody uses it. RLUSD by miles is the better choice. It's getting there on terms of integration. So preferably for safety reasons, RLUSD all the way. Now, on the topic of RLUSD, Ripple in other words, I think to get more stablecoins, as I heard also in the UK, they think about to freeze some saving bank accounts. Yes, there has been rumors suggested that essentially banks might start freezing people's assets once we get close to CBDCs. It's mainly to do with the Bank of International Settlements. So there was a man from the Bank of International Settlements. This man came out and said that once the world gets close to releasing CBDCs on a global basis, so every country is getting close to releasing their CBDCs, the banks of that country will freeze everybody's bank accounts to release the CBDCs. The reason why they would do that is because if they mention that CBDCs are coming, people will run to the banks, take out their cash, and will have a bank collapse, which is what they don't want when they're just about to release CBDCs. So this man from the Bank of International Settlements, about 3 years ago, did say that essentially when essentially any nation gets very close to releasing CBDCs, they will most likely freeze the banks so that people don't run to the bank and try to take out cash, because that would collapse the entire banking system if everybody wanted to withdraw at the same time. So yes, it's a possibility regarding essentially the banks freezing your accounts once we get to that stage essentially of CBDCs, which is why it's better in most cases to hold a lot of, some money in stablecoins. Where do you recommend to buy RLUSD? Uphold, if I'm not mistaken, does sell RLUSD. Now, depends on jurisdictions, but it does sell it. Now, Ripple is what we're going to talk about next. "42 banks oppose Ripple's US bank license application." 42 banks. Well, we know for a fact who was, trying to stop Ripple's progress regarding the SEC, Gary Gensler, being weaponized to go after Ripple. I mean, the argument has always been Ripple versus SEC was just, one big show because it's all about timing. The other argument has always been that Ripple versus SEC was a genuine case where Gary Gensler was, in my opinion, was weaponized to go after essentially Ripple. But both outcomes were still on the table. But, when you hear news regarding 42 banks opposing Ripple's US bank license applications, I mean, we could take a guess of who was behind the SEC stopping essentially and slowing the progress of Ripple inside the United States. 42 banks were the reason Gary Gensler was weaponized to go after Ripple, because they know how much of a threat Ripple is. If Ripple wasn't a threat to these traditional banks, then they wouldn't even bother going after it. You know why 42 banks aren't opposing essentially Circle, who, by the way, is also getting a banking charter license? Do you know essentially why the banks that are going after Ripple are not going after Circle? Because Circle went public. Because when Circle went public, guess who is buying majority of their shares? The same people that are running the show right now. When Ripple stays private and doesn't go public, that means, one, we have money, as Ripple said themselves, and two, we don't want to be controlled. But Circle, on the other hand, went public, which means they don't mind being controlled and they need money. So that is why, even though Circle and Ripple are both applying for banking charter license, there isn't 42 banks lining up to slow down the progress of Circle, even though that's also applying for a banking charter license. No, 42 banks are lining up to slow down the progress of Ripple. Obviously, it's not going to work in any sort of a way. And the weaponization of the SEC didn't work either, because Ripple ended up going completely international and grabbing licensings from every country out there. Ripple's bid to receive a federal banking charter has drawn heated opposition from the banking policy institution, the BPI, an organization which speaks for 42 of the biggest banks in the US. The BPI raised regulatory and essentially structural issues regarding Ripple's proposal of the National Trust Bank Charter with the OCC. The Ripple essential proposal involves plans to provide stablecoin services through RLUSD, offers essentially custody of digital assets, and essentially assesses the full-on access to the US payment system through the Federal Reserve master account, which, by the way, it was, we've talked about the master account regarding Ripple and applying and so on. This was something a very long time ago that was told. A long time ago, inside the crypto space, people said essentially that XRP Ledger, essentially will be connecting to the Fed account. And crypto influencers who hate XRP, who hate Ripple, said that's never going to happen. You know, the Fed account working with Ripple, never going to happen. Fed account working with the XRP ledger, never going to happen. Is what crypto influencers told everyone around them. And crypto influencers went as far as saying people who buy XRP or support Ripple on their venture, on their business venture, are stupid, are essentially not intelligent, are morons, and so on. And that's what the crypto influencers told people, essentially, inside the crypto space. If you buy XRP, you're stupid. If you essentially support Ripple, you're a moron. Ripple's stealing from you, and so on. Is what the influencers, a lot of influencers told people. And I don't forget those people, but I'm not going to name them on this live. But when you hear essentially Ripple, you know, when the news first came out that essentially Ripple was not only applying for a banking charter license, but also applying for a Fed, essentially, master account. They're only doing it for, obviously, RLUSD. But that doesn't mean that our XRP ledger, or essentially, or XRP itself, isn't going to squeeze itself through the Fed account also. The effectiveness, essentially, this effectively provides Ripple with full banking rights, something that traditional financial institutions are uneasy with, because they know that essentially Ripple is going to crush them. Honestly, Ripple will crush JP Morgan and everybody else on JP Morgan's level in the banking sector. The BPI, together with the American Bankers Association, protested the brief public comment period, claiming it wasn't sufficient to release a charter so new into this focus on crypto. They also questioned that Ripple's structure is not essentially fiduciary enough, departing from standard estate and trust services. What they're trying to say in the simplest way is that we don't control Ripple. So we don't agree with Ripple having a banking license. If JP Morgan, if BlackRock, if Franklin Templeton, Goldman Sachs doesn't control Ripple, then why should Ripple have a banking license? Is the simplest way of what they're trying to say. They don't see it sufficient enough. They don't essentially say, why should we release a banking license to this company? Their structure isn't good. Why? Is it because you're not controlling it? Is that why? What's wrong with their structure? Aside from regulatory challenges, Ripple remains fighting legal ambiguity over XRP's status as a security due to its ongoing dispute with the SEC. The SEC was weaponized from day one to go after Ripple because they knew Ripple was a massive threat to the traditional banking system and to the families that run the show. At the core of its conflict is a larger ideological battle: decentralization, innovation versus centralized financial power. Ripple's vision of quick, inexpensive, tokenized transactions, it attacks legacy systems based on SWIFT. And everybody thought Ripple was going to work alongside SWIFT like it's one big happy family. Ripple was never going to work alongside SWIFT. It's coming in to replace SWIFT. That's what it was trying to do from day one. Wire transfers and high costs. With more than 300 institutional partners worldwide and services like 50 plus markets, Ripple is forcing a new financial model, one where banks no longer control. While Ripple disrupts the traditional system, developing regulatory frameworks and the resulting collision could change the future of digital finance in America, not just in America, in the entire world, where banks could become obsolete. What's the point of a bank account when you can have a wallet to trust? Just to put it out there, if you are somebody that's hating Ripple still, or if you don't hold XRP because your favorite crypto influencer told you XRP has no future, just want to put it out to you. When Ripple essentially succeeds on getting this banking license, when Ripple is able to push its RLUSD into the Fed account, and even its XRP and its XRP ledger into the Fed account, when Ripple's case is dropped, when the ETFs kick in, and essentially XRP has the most amount of ETFs compared to any other ETF out there is nothing, and I mean nothing, stopping XRP from touching not just the moon, another galaxy. So if you're somebody that's not holding XRP, just watch what's going to happen. If you're somebody that hates XRP, you're going to cry later on for not getting involved. I'll give you an example. Of somebody very, very high up who just came to the realization that, hang on a minute, if Ripple is able to beat the banks and get a banking charter license and a Fed account, if Ripple is able to beat the SEC and essentially case closed. Is if Ripple is able to get their ETFs activated, if Ripple is about to achieve that cross-border payments, then it's not just the moon is the limit, it's the next galaxy. So Galaxy Digital CEO didn't like XRP, didn't like Ripple, only loved Bitcoin. He only loved Bitcoin. Well, it came out today that essentially Galaxy Digital bets big on XRP now in an epic portfolio shakeup. A company that didn't like XRP, just Bitcoin. Only Bitcoin has future, is what they used to say. But now they've come to the realization, though, if Ripple is able to beat the SEC, beat the banks, and get the banking charter license and the Fed account, then what's stopping Ripple from touching another galaxy? Never mind the moon. Galaxy Digital Inc. has made a bold move, not essentially that has caught the crypto community's attention. According to its latest US Securities Exchange Commission SEC filing, the company now holds $34.4 million worth of XRP, just out of nowhere, came about. The firm had no record of holding this digital token 6 months ago. 6 months ago, Galaxy Digital didn't even touch XRP with a 10-foot pole. But now they're fully in. Interestingly, the firm had essentially no record 6 months ago. Galaxy Digital's new investment in XRP is a part of a bigger change in its crypto holdings. Galaxy Digital's recent filing shows the company is currently holding 15.4 million XRP tokens. This is a small drop from the 16.9 essentially million it held in the first quarter, essentially other companies that held essentially in the first quarter, but it's still a big change from December 2024 when it did not hold any at all. At the same time, Galaxy Digital is increasing obviously its other investments. As of June 30th, 2025, the company holds essentially 17,102 Bitcoins worth about $1.8 billion, more than it essentially held last quarter. On the other hand, its Ethereum holdings have fallen sharply. Galaxy Digital is selling Ethereum, increasing Bitcoin, and adding XRP. The company also sent $40.7 million worth of Solana to Binance. Interesting enough, Galaxy Digital might be looking like they're essentially getting rid of their Solana. So they're getting rid of their Solana because they're sending their Solana to Binance Exchange. They're selling their Ethereum, increasing their Bitcoin, and adding XRP. Galaxy, and also, by the way, Galaxy Digital loved Solana. Couldn't stop talking about it. But now they're sending essentially Solana to Binance Exchange, which is an indication of sell somewhere down the line. Galaxy Digital saw a 40% increase in the value of its digital asset portfolio in just the 1 quarter. This is thanks to rising crypto prices and its new holdings. The total value of these holdings now stands around $1.2 billion. The company's financial performance has also improved. Galaxy essentially reported $30.7 million in net incomes for Q2 of 2025. This is a major turnaround from $125.6 million loss in the same period last year. Its operating profits rose to essentially $395 million, showing that strategy may already be paying off. Galaxy is not the only firm showing interest in XRP right now. Several companies are now including essentially the token in their balance sheets. Flora Growth Crop said it now owns XRP along with Ethereum and Solana to make their financing stronger. Hyperscale Data Inc. also added XRP to its crypto holdings and will start sharing monthly updates about its assets. Alt Capital Group, which is a part of Hyperscale, plans to buy up to $10 million worth of XRP. The company wants to use it for cross-border payments and build decentralized finance tools. These are steps that show XRP is becoming more important in the business day, every day, day by day, by second by second. Many companies are now more interested in XRP because Ripple has won their recent court case a while ago regarding the SEC, and these wins have made big investors essentially see XRP as a safer and more promising asset, especially with this banking charter next. Staying on the topic of XRP's expansion inside the market space, details have come out regarding South Korea and Ripple's partnership. So here is something that's essentially revealed today regarding Ripple Asia. Ripple Asia's president makes a statement. So here it is. Ripple XRP adoption is gaining momentum in South Korea. The country's digital asset custodian, BDACS, recently announced the launch of an institutional-grade custody service for Ripple XRP. This step is considered the first concrete result of a street partnership established with Ripple back in February. BDACS stated that XRP is one of the most traded digital assets in South Korea. The new custody service provides access to XRP to large institutional investors in regulated environments in South Korea. The infrastructure will be provided by Ripple's institutional custody solutions, Ripple Custody. This solution is optimized not only for XRP, but also giving access to RLUSD as well to institutions. To increase institutional access, BDACS has completed the integration with Upbit, CoinOne, and Corebit. 3 major cryptocurrency exchanges in South Korea are also on board. This development aligns with South Korea's Financial Services Commission policy to promote digital asset markets. BDASC's officials stated, "We will support the growth of not only custody, but also tokenization and stablecoin usage within the XRP ledger ecosystem." According to the market research, the global digital asset storage market could exceed $16 trillion by 2030. It is estimated that tokenized assets could amount for about 10% of the global GDP. Fiona essentially Murray, Ripple's Asia-Pacific president, highlighted the importance of this partnership, saying, "While the regulatory environment is changing rapidly, institutional demand is also increasing at the same time." BDAC's CEO said in a statement, "Together with Ripple's blockchain infrastructure, we will provide a secure and reliable storage environment. Together with Ripple, we will lead the growth of the digital asset industry." BDCA also essentially is already actively involved in Busan's blockchain free zone and is developing partnerships with projects like on the crypto space on other assets as well. Now, honestly, the easiest way to put it for you is some people might be thinking to themselves that essentially the market space has run out of fuel. You know, some people might be looking at the crypto space right now and going, the crypto market's just run out of fuel. It's just consolidating sideways, it's going down, it's going a little bit up, it's doing nothing pretty much. What I can tell you is, day by day, still, regulations are coming in, as I shared you with the EU, giving full green light to banks and institutions to enter into crypto space. Hong Kong making essentially regulation a little bit stricter, but still giving a green light. South Korea essentially green lighting XRP, you could pretty much say, for banks and institutions to get involved. Galaxy Digital, who is Bitcoin only for the longest time, realizing that, hang on a minute, if Ripple gets a banking license, a Fed account to push their essentially RLUSD and even their XRP, and the XRP ETFs kick in, XRP is not just going to the moon, it's going to the next galaxy, pretty much. There are so many things that are happening and just falling into place like a domino effect in the background that the market might not show it to you, but trust me, when the time is right, it's going to go absolutely ballistic is what it's going to do. Because the amount of institutions lining up, positioning themselves, especially on XRP, realizing what the next step is going to be. When you have 42 banks trying to take somebody down, you know that somebody is going to become something or someone someday. You know for a fact that Ripple is going to become a very powerful company if 42 banks are trying to slow its progress. So it's either you're betting on the bank side and you're an XRP hater, or you're standing with Ripple. And you want to see that change happen in the world, and you want to make a very, very huge amount of money on the side too. Honestly, if 42 banks are trying to stop Ripple's footsteps, you know for a fact that Ripple is going to become something great. And I think Galaxy Digital saw that coming as well, hence why they increased their position on XRP, decreased their position on Solana and Ethereum. On that note, that so much is happening in the sidelines, so much things are happening in the background that you're not fully aware of, but that's why I'm here to share you what's happening in the background. On that note, we have also reached the endings of tonight's live. This was episode 350 of the CMF Live. If you're watching this for the first time ever, this is called the CMF Live. It stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news on cryptocurrencies, CBDCs, AI, politics, and regulations. Also, we do Q&As on this live as well, which means if you ever do have any questions or statements, put it down in the comment section. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Now, obviously, before we do go, let's go to the comment section first, just in case there's some questions that need to be answered. So let's go to the comment section first. Let's see where we're at. Thanks, Miles, for sharing your opinion. No problem. Call anytime. Love it, Miles. 42 banks in the run. Let's go. On the run. Let's go. Hi, Miles. When do you think XRP will be high price by September? Johnny, consider a change because once it does go, it's going to go absolutely ballistic. When can we see the bull run price that are so high? Because it's been a long time. No movements. Movements are happening in the background. The positioning to be moved. Can we keep our RUSD on tangent? Should do. Yes, no problem on that. Proof that XRP is the ultimate. Never sell. It's bigger than anything we can essentially fathom. Facts. Let's go free and further. What information is expected around August 15th of this year? Does it concern the Ripple ETF or the SEC final decision? Regarding August 15th, it's just essentially where Ripple stands and where the SEC stands is what's going to be coming out on August 15th. Before August 15th, the SEC can pull out and the case essentially and the case can go away. Even afterwards as well, even on it if they wanted to. But it's between the SEC and Ripple, not the judges, just between Ripple and SEC regarding August 15th. Hi, Miles, CMF. Golden Dragon, good to see you. How you doing? How you been? Please like Miles. Puts a lot of time and effort for us. Let's go, Golden Dragon. Yes, if you have already liked and retweeted this live on X and you're watching this on X right now, thank you so much for liking and retweeting. If you haven't liked or retweeted and you're watching this on X, please like and please retweet this live. If you watch this on YouTube, drop a like as well if you already haven't. If you have, thank you so much. If you followed me during this live on X or on YouTube right now, you're watching, thank you so much and welcome to the CMF if you followed me as well. And I follow back as well. Thanks, Miles, and have a great night and see everyone tomorrow same time. Artistic, let's go. See you tomorrow same time as usual. Is it safe to update your tangent from the App Store? Is it safe or is it something that you recommend we do? Updating your tangent wallet through the App Store is fine. As long as you do it through the App Store, it's perfectly fine. Night, Miles, the CMF. Pablo, see you tomorrow, same time as usual. Miles, why are you finishing early today? Because that's as much as news we had, to be honest. And we're not finishing that early today. Normally, we would finish around 23:20, 23:30. Today, we finished at 23:15. So 5 minutes earlier only, to be fairly honest. Great job, Miles. Thanks for the real information. Let's go, Davey. See you tomorrow, same time as usual. Great live. Like, share, and leave a comment for support. Take care, Miles, on CMF. Let's go, Ray. See you tomorrow, same time as usual. Thanks, Miles, for all the news. See you tomorrow, CMF. Orphan, see you tomorrow, same time as usual. Learned so much from you, Miles. Night all. Let's go, Susie. See you tomorrow, same time as usual. You don't like our company anymore? You don't like our company anymore? No, I love the company of this CMF. Thanks, Miles, for your excellent live show. It is always a pleasure to listen to your news. Very good job, brother. Thousands. Thanks. Let's go, Carl. Thanks so much for the kind words. Good night, Miles and CMF. Excellent live. See you tomorrow. Let's go free forever. See you tomorrow, same time as usual. Thanks, Miles, for another amazing little show. We all appreciate your time. Joe, thank you so much for the kind words. Thank you, Miles, for all your help. Let's go, Mike. See you tomorrow, brother, same time as usual. I cannot wait for the bull run so I can, and with the profits, buy some more XRP. Let's go, funky brother. Much appreciated, Miles. Here is the bouquet. Enjoy your night on. Let's go, Lena. Thank you so much. See you tomorrow, same time as usual. Good night, Miles and CMF family. Funky brother. See you tomorrow, same time as usual. XRP. Let's go, Mike. Thanks for all you do. Let's go, Shelly. Thank you so much as well. See you tomorrow, same time as usual. Ray, let's go, brother. Thank you very much, Miles. I appreciate it. Have a great night. Let's go, Carlos. See you tomorrow, same time as usual. I will see everybody tomorrow, same timing as usual, for episode 351 of the CMF Live. Like, comment, follow, subscribe, retweet. If you already haven't, if you have, thank you so much. I'll see everybody tomorrow, same time as usual, for episode 351 of the CMF Live at 10 p.m. London time onwards. Love you all. See you tomorrow, same time as usual. Have a great day or a good night, depending on where you are around the world. Love you all. See you tomorrow.